Warriors. How's everyone doing? What day is it today? Hi, Brock. Sinatra, how are you? Everyone doing okay? I just wanted to start off with the gold-silver ratio. To me, it looks like we could still correct this first decline. I know a lot of people are saying this may not be the top, and because of this, I could see that, but we could be due and getting some type of ABC for A, and we're going to get some type of B wave. 61.8 would be about 118 to 120. So this translates still into preferring the short in silver when you're bearish in metals. And if you're bullish in metals, still favors alongside of gold over silver. Everyone with me? So moving to gold, it may have done enough for this recovery up here. See that? We've had a nice little bounce, some type of fib retracement. I've got a question for everyone out there. You ever use a 2-hour time frame? Because I've noticed it's pretty clean. It's an interesting time frame. I just started experimenting with it. I like the look I get from it. I can't explain why. Can anyone explain why the 2-hour time frame's pretty clean? Or what's the value of it? So I know if I should, continue. Can anyone mentor me out there? Help coach out. Why should I use a 2-hour TF? Okay, I don't, huh? Paulie does. That's a great reason actually. Okay, because Paulie is a pro. He's very good at what he does. And day trading too, right? Less noise, that's another good reason. That's probably why. Okay, so gold coming off, and if you're bearish, someone that also is pretty good, I think Grega has a pip out here on the short side of gold. So we'll see what happens. The only thing that gives me pause short term is this right here on the 15-minute. So, we could intraday or maybe even by tomorrow probe this level one more time and take out this high. Even on the 15-minute, I would prefer to see the reading under 70. This is above 70. So if we get one more rally up there, I'm going to attempt shorts because actually, I am longer term bearish, and why can't we see this? Kind of looks like a megaphone here, doesn't it, guys? And what megaphone worked as of late after a throwover? So, here's the gold. Kind of has a megaphone look to it, doesn't it? And this was kind of a breakout line once we got over 1440 a while ago. So watch this. We could fill it out down here. The only other thing that gives me a little bit of pause is that the shares seem to be a little stronger than the gold itself. Look at Newmont. I mean, taking out highs by, look how much more the gold share, and this is one of the, it used to be Homestake, and now Newmont's one of the longest corporate gold miners alive. So that looks, pretty good. We are diverging, but doesn't that look much more powerful than the bullion itself? I'll bring Blake on. But keep that in your head, and then keep that in head. Actually, that's pretty bullish. Scott's seen one more new high, 1749. That would be, yeah, oh, that's good, ride the curve. All right. All right. So, some great reasons. So, like to have you guys involved. Thanks for your input. One other thing I talked about yesterday was, you know, this euro pound. We're getting a pullback today, but you know, I think you can buy all these pullbacks as long as we're holding 87.40. So, you know, if you didn't act, you know, what's wrong with having a piece on here, and then if it pulls back towards this 87.5 level, try another one. You know, it may not accommodate longs that didn't get long this breakout. In fact, the most bullish thing euro pound could do, and any other market, cover up the title. Forget what the title is, right? And you know what? If you have a bias on anything, you know, cover up the title and just look at the chart. But the most bullish thing it could do is not give people a chance to get long at 87.40 again, right? So everyone missed, oh, I'll just sit here, I'll buy a test of the breakout. Well, you know, if the market accommodates, I might become more skeptical if we retrace all the way down here to the breakout and give people an opportunity. Nothing wrong with giving people the opportunity once, but if we start hanging around here, that scenario is off. I just wanted to point out the lesson that the most bullish thing a market could do is break out and not give people a chance to trade that level for a long time. Okay, so if Mr. Market is too accommodative for you and say you traded at 87.40 5 times, you might want to ask yourself, why is Mr. Market accommodating me when I miss the breakout and it's letting me get in 4 times? Okay, yes, yeah. You know, one of the major reasons is the daily. I'm not an Elliotician, but this was a very powerful move. And this was 61.8 back. They played it with the, on closing basis, a little bit, 87.44. We'd take that out, then we're going 78.6. But what kind of high is this in euro pound on the daily? Pretty powerful reading up there. Probability being that when you have a confirmed high, it's not usually the high, but a high. So right now I'm thinking there's a possibility it could be a high. So, I mean, if we're going to do something like this, and let's say that would be a little bit too aggressive. Why can't we retrace 50% of this decline, right? So you're talking 87.95 for, that would take you back, halfway would take you back to here, right? Still a good trade. And with that being said, I'm going to bring Blake on and see what he's thinking here on Wednesday. And let me ask you guys one last question. Is there a better team of traders in any one spot that you could receive their analysis and hard work free or paid in any other chat room? And if so, who are they? And if so, if you believe it, can you imagine what it would be like to have content like this at your fingertips all day long, all evening long? We're only catching a piece of the US session here. Okay, why not have access to what we're doing in our chat room for later on in the day, like Asia? Scott Henderson is telling me that Asia sessions are, you know, you're getting a lot of action in Asia, which is, you know, how it never used to be that way. You could write off Asia, but you know, we have people in our chat room during Asia, and if not in the chat room, you're going to get push alerts, and you're going to know what's going on, not just during face, but 24/6. So who's brave enough to raise their hand and say they're going to subscribe to ForexAnalytix today? Anyone out there? Who knows the who knows about the let's just call it Sean, you are? Not today. Why? Why in the coming days? You need your own oak to work for you? Sean, you're going to sign up today? Okay, thank you, Tian. All right, there you go. All right, because you reap what you sow, Sean. So you're not really paying us. You're really investing in yourself. You look at it that way. And okay, on Friday, well, great. Okay, so Blake, how you doing this morning?
Good. First of all,
Dale, Barnum, and Daly.
your comment about the 2-hour charts. Paulie is a big 2-hour chart fan, and he
Okay.
likes it because you can break down the time frames pretty cleanly in a 2-hour chart. So, and matter of fact, if you look at some of the ForexAnalytix charts, he'll end up posting some of the he'll end up posting some of his charts in a 2-hour time frame actually on his analysis. I don't know if he is going. Let me see if
Anyway,
I
I'll
can't
tell
think
you
of one.
something. If Paulie uses it, he's one of the best scalpers I've ever seen in action. That's enough for me to know there's value in it.
Yeah, I have to look at some of these. Sometimes he posts charts on, you can. No, that's a 4-hour, 4-hour, 4-hour. Sometimes he'll put in a custom 2-hour chart on something that he's looking at from time to time. But I know he uses them every day. So,
Okay.
and I can't say that I use them, but he's always doing it. And the thing about Paul Franco, and let me take a step back and talk about Paul, because he's probably not listening in right now. I'm assuming he's taking a nap because he gets up at, I mean, he's like one of those guys. He's up at midnight, then he'll trade the European session, he'll take a nap, then he'll get up and trade the North American session. So, but the reason why Paul Franco, or SPZ Trader, if you guys know him on, some of you know him by his handle on Twitter. I originally met him on Twitter probably about 10 years ago, maybe 10 or 10, as soon as I got onto Twitter. So it was maybe 10, 11 years ago or so. And he is a guy that I spent many years following, interacting with on Twitter back in Twitter's, early days. And I was looking for somebody to join the Wise Trade team, probably about 8 years ago. And I'm like, man, this cat, he's an active trader, and he's like very good. And I talked to him personally, and I offered him a job because I knew he was always up in the middle of the night, and that's when we needed somebody for that time frame, like early European hours. And but what I've learned about Paulie is, because we just frankly don't pay him very much. I mean, that's the thing about our company. We don't make a lot of money, because if you look at our the cost of our products, it's like anybody that works with us, they know that it's not like we're Goldman Sachs or anything. But I know he makes a good living trading, and he still does. And drives a really nice car, and everything else. But the fact of the matter is he's very self-sufficient in the markets, and he trades the markets for a living. So when Paulie talks about his levels in the market, what he's looking at, the charts he's looking at, it's important to pay attention to him, because he's a guy that does it, and that's been my kind of my criteria all along. Is you have people like Amanda in the chat room. She fiends for herself and her daughter. And that's the way. That's the way I love having people on the team that are like Paulie, like Amanda, is that that's what they do. So anyway, so I just want to make that comment. We were just actually having this conversation. This gentleman in the chat room was talking about the Dutch government wanting kids to go back. We were talking about like everybody going back to work and school, and this is what happens when the market's really slow. And by the way, if you just if you want to know what I'm looking at in the euro, is it 108 to 109. I'm not doing anything while we're in between 108 and 109. I mean, nothing with the dollar really. I'll talk about some other markets here in a second, but it's been a pretty quiet night overall.
They reopening everything in Amsterdam too?
What?
The Dutch are going to reopen schools. Are they also going to
Well, I don't know what else.
reopen Amsterdam?
I don't know. But he was talking about like letting the young kids go back to school, the Dutch government, and I'm like, man. So I have two teenagers. I have a 13-year-old and then a 15-year-old, right? And it's so funny because if you look at the two kids growing up, my 15-year-old, and this is just typical kids, right? But this is my 15-year-old. He's always been the kid that's obsessively washed his hands, almost like an OCD type of thing. Obsessively wash his hands. He's always like the cleaner of the two kids. My younger kid, more of a, pig pen.
Kid.
Yeah, he's more of a kid. Yeah, he doesn't wash his hands. When he washes his hands, he sticks his hands in the underneath the running water for like 2 seconds. Then and ironically, well,
He's
not
a healthier one.
No, I said not ironically. Unsurprisingly, he's the one that gets sick all the time. And so it's funny because my older one, who's more of the obsessive clean, one, he's like, oh, I must have got, so-and-so's genes. I'm healthier. And I'm like, no, you just wash your hands more. And this has been our argument like for 10 years. He's like, was like, well, I take more of my genes from, mom or dad or whatever, and I won't get into the specifics, but it's really just because he's cleanlier, that's it. I mean, that's the bottom line. And my younger one, who actually ironically is more the athlete, he's the one that gets sick more. And so, I know for a fact, and it's not just that, it's just being around kids for so many years and, friends, kids and everything else, if you send young kids back to school, they're the ones that are just they don't have, my 13-year-old now, he's very, very aware of, washing his hands and, and he doesn't get sick anymore. But the younger kids are the ones that you really have to worry about passing around germs. And, and it's not so much of them getting, the virus, it's them bringing it home and then to your grandparents. And then, that's the bigger problem in my view. And we were talking about like the increase in virus cases in the United States yesterday, which is kind of alarming. And, everybody's hoping it was just an outlier. And I should show you something really quick. This is this is analysis from a firm that we actually subscribe to, Pathanon Economics. But I want to show you this one chart really quick, so you guys can see this. This is the jump in U.S. cases yesterday to highs, right? And you can see the death toll also jumped, but hopefully that's just like they're hoping it's just an outlier. As we are preparing to send people back to work, and look, I don't care so much going back to work. I mean, we've got to do what we've got to do. And this is the point I was trying to make in our chat room. I'm more worried about this fall, and I'm worried about my kids. I even tell my kids, I'm worried about you guys going back to school and starting sports again. And it's, again, and this is because unless we have a vaccine, the problem is you're going to get, kids interacting, and you could try to be as safe as possible by having them spaced out as much as possible. I don't know about where you guys live, maybe different than from where I live, but kids are pretty packed in classrooms as it is. So I don't know how you're going to get kids to social distance at all. I just don't see it even possible, especially under the age of 10. So it's just going to be a big germ, area. And, the next thing you know, people are going to get sick again. I'm more worried about a second wave in that instance. Letting people go back to work, I don't think is so much of a big deal. Although you have a lot of people that do fall into the camp where they don't believe that that the virus is even real, and that's going to be a problem. And I guess those people just aren't going to believe until they actually get sick, or somebody that they love or know actually gets, deathly ill, or unfortunately, faces the consequences before they become, more understanding that this is actually a real thing that's happening. But anyway, that was just like a conversation we're having when the market's extremely slow in the chat room. But let's talk about some things that are actually developing in the FX market, because like I said, the euro, I'm still looking at the euro dollar and thinking that, as long as we remain below this trend line here, and you can see it right here, I remain bearish. So basically, while we're below maybe even 109 and a quarter, because the euro might actually give us like a false breakout, and then you can see the 618 retracement right here. We could do one of these. So if we do make it to 109 and a quarter, I would actually be a seller up there in the event we did. Hold on, you could probably do it something like this. Right? Whoops. Something like this might be just because I'm looking for things to do today. Steve, you can hear my birds, and you know what? It's dark.
Yeah, I love it actually. I mean, I love it. It's like you're doing the webinar in a forest.
They are so loud. They are very extremely loud. They're about ready to leave, though. I don't think they're going to be here, and they're not going to be here in the next month, because it's going to be extremely hot starting today. Actually,
yeah, they're going to want to move to a little bit of a cooler place, right?
Yeah, they're going to. I don't know what they're going to do, but they're not going to be here. Anyway, so that's the euro, and I'm thinking if we get up to 109 and a quarter, that might be an area to sell. The cable, we've had a nice bounce back, but we're going to face a lot of resistance right here at 124. That was the breakdown point. I think that's going to be big. The Aussie moved wildly last night, and I think this was a fix that did this. But you see the Aussie spiked up out of nowhere. I think it was fixing flows. You saw, just kind of, and then of course overnight in Europe we retest it, and then we start moving lower. The Kiwi dollar kind of did that at the fix as well. Dollar Canadian's come under a little bit of pressure, and I think if crude can finally bounce at this really important support, and I'm not a crude oil bull. You guys saw my charts if you follow me via Twitter. I'm not a crude oil bull, but the risks of a bounce, I think it could happen. We could very easily go from $12 to $15, and pretty easily, and that's a big jump. And that might actually be, excuse me, a catalyst that drives the dollar Canadian through channel support, quite possibly. The dollar Mexican peso pulled out of a triangle yesterday, but I think that any dip back down here to like 24, low 24 is probably going to find some support. You can see it's actually finding support right here, but we might actually make it a little bit lower. And I'm looking at things like that. This is not a very exciting market currently, and I'm not super excited about anything. And you know what? I wanted to let you know that Steve actually looks like he's having internet connections.
Yeah, I'm here, but it seems that this probably the lines are in general overloaded, and like every 10-15 minutes it works perfectly, but every 10-15 minutes it goes down for like 30 seconds.
Okay, so what I'm going to do is when I pass it over to you, I'm going to stay on, and if I hear you guys struggling, I'll pop back on.
Yeah, the good thing is that it seems to work fine. So if I go off, I should be back within like 30 seconds. So it's not going to
Got
be
it.
the end of the
Okay.
world.
All right, very good. Well, like I said, I think the markets are pretty quiet right now. One of the things we have to look at is I do want to take you over to the S&P. The S&P broke the 2750 yesterday. We're challenging the underside or getting close to the underside of this trend line. We can make it all the way back to 2800 intraday. I think the market was pretty bearish yesterday, but I think rightfully so. I think today you're seeing a little bit of a squeeze, just kind of shaking some weak hands out. But with the S&P, I think we have to pay attention to.
Didn't you have that harmonic on before it got there, Blake?
What's that?
That A B C D.
Yeah. I've had that up there for
before it got there. Oh, what a
Yeah, it was
perfect
like
completion, man!
When it was right here, we completed it to a T. So we were getting close. Actually, I think we were right here, reaching for this resistance, and I'm like, hey, that's an AB equals CD, and we got there to the pip. And basically have reversed since now. And I think while we're below this trend line, maybe below 2808, 50% retracement, you have to, I think you have to sell
26
rallies.
maybe.
Yeah, I don't, I mean, it's hard for me to try to anticipate.
Well, if you got short here, you'd probably have a target.
Yeah, I mean, well, I'm short right now. I'm short S&Ps personally, and my cost average is not too. It's actually really close to where we're at, but because I added when we were above 2800 early last week because I knew we were completing that AB equals CD pattern. But the thing is I'm not so much concerned with downside targets. I'm just concerned with making sure that the trade doesn't get away from me and break much higher than where we went. Because if it goes higher than 2,900, I might just end up closing my shorts and then revisiting at some other point. But we're heading into May. Sell in May, go away. Right. We're seasonal, tough time for the market anyway. But more importantly, I think downside targets have to stay open because it's more of a product of, we could try to send all the people back to work that we want. Will people go back to work? Will people, like, I look at my own family, and it's not like I'm going to a restaurant anytime in the near future. You can open a restaurant. I might go get some takeout, but I'm not going anywhere. Do I need to?
The big debate on S&Ps really is: are we going to have a retest of the lows, take out the low, or is the low in?
Yeah, and my argument for the last few weeks, and if you guys recall, I'm expecting us to consolidate down here. And can we hit new lows? We can, but I think it has more to do with things that I don't have any control over, like the virus, like the, or I say I, meaning we have any control over. It's the election, is the virus, where we go from after. I think, we pull back and we probably see 2,500 and then just kind of bounce around. And where we go from here is more into the fall, how do things progress, or improve, all in all. So, what I should check, since I haven't been checking recently, do we have any data coming out today? Stelios, maybe you're there. Oh, I guess we do have Canadian CPI. Hold on.
Just Canadian.
Okay. Let's pay attention to the CAD. I don't have any exposure right now. I traded it on the long side the last couple of days and did pretty well with it. So I have no Canadian exposure. I sold it yesterday, literally top ticked. I got out at 142.60 as I was getting my first cup of coffee, just rolling out of bed, and it hasn't looked back since, and I'm kind of happy about that. Oh, hold on. Here comes the data.
Okay.
Weak CPI,
Yep.
so you can see the dollar CAD just ticked up a little bit, but I don't expect data to really influence the market much. So, yeah. All right. Well, there we go. Just not a lot happening. So, how you doing this morning, Stelios?
I'm doing very well, thank you. How are you?
You know,
In
good.
the middle
Just
of the
quiet.
jungle.
It's a quiet session. Yesterday was kind of chaotic. We had some decent volatility yesterday. Today it's more quiet, and I'm enjoying it. But it is Wednesday, and like I said, I think there's some setups, but I'm not overly eager on trading right at this moment in time. I think everybody, everybody's watching crude to see what crude's going to do, and I have a feeling crude's just going to sit here all day and not give us much, is my opinion. But maybe I'm wrong.
Could be. I mean, remember Monday and Tuesday, everybody was looking at the May future going negative and all that, and people were saying, relax, don't worry. Look at June. June is still at 20, 21. It's pretty stable. Look at it now. It's lost 50% in a day. So I think oil volatility is going to remain for sure, for various reasons. But FX has been very quiet today, which is probably good, a nice little change. And the main question for me is equities, like you mentioned. I still think we're going to be moving lower. The only issue with this is the fact that I think from what I read, positioning is quite bullish. Quite bearish. So this might be a short-term issue. So we might revisit, I don't know, 2,900 in the S&P or something like that. But I do think we're going lower after that.
Got it. Well, Steve, are you here?
Yeah, sorry, I am
Okay.
busy by trying to coordinate like 10 things.
Got it. Well, hey, I'm going to pass things over to you, and I just want to mention, guys, if you have not signed up for the Traders Summit, here, look, I'm going to put the link in our chat box, so this way you guys have that that link. Make sure you get registered. Remember, it is free to attend. Here, I just put it in the chat box there. Great group of speakers. I mean, you can't really put together much of a better group than our team has. And Steve and the rest of the team, Joe, Stelios, Velu, I mean, and on top of everybody else in the team passing around the good word, has really put in a lot of time and effort to put this together. So make sure you guys get signed up. You're not going to be disappointed with the group of speakers and all their presentations. So we'll see you there. All right.
Take that, Davos.
What's that?
Take that, Davos.
Yeah, that's right. That's right. Davos has got nothing on us.
No.
All right, guys, have a great one. I'll see some of you on the daily roundup webinar. Remember to get on that. You do have to be a member of ForexAnalytix, so make sure you test us out. It's only $1 for 10 days. All right, guys, it's all yours.
Thank you, Blake.
Thanks, guys.
Good luck, Blake.
So, Dale, how you doing, man?
Good, buddy.
Same
Good.
here.
I was going to ask you. I'm looking at some of my positions. I have a bearish position on bonds in an ETF, TBT, and pretty close to a retest of the recent low. Looks like it could hold, but I wanted to congratulate you on the trade selection because the structure is like night and day. I mean, it's completely the opposite of how it's been for so many years, where our rates here in the US have been much more stiff than what's happening in Europe. And, year on year, yields are much more resilient in Europe than they are here. I wonder why that's not translating into higher Euro USD prices. You have any idea? But great bond call and trade selection going with European bonds, man.
I like being short bonds. I'm actually pretty much where I shorted them. So the trade is net pretty much zero at the moment. But I just like the risk reward, and like we said in a previous webinar, I think that 10-year US could go towards zero. But for choice, I'd want to be short 10-year treasuries as well. But I had to pick one, and I picked the bunds. Now, why? In terms of translating into FX, just we have to remember 10-year treasuries, 10-year bonds, 10-year instruments. Spot FX gets obviously influenced by interest rates, but in a much more short term. So in the grand scheme of things, 10-year bond prices are not going to really influence that much where spot FX is trading. But
still confidence, still confidence in the U.S. dollar.
Yeah.
You would think that when you look at the way we've handled COVID, where we have like a quarter of the cases in the world, a quarter of the deaths in the world, it's not over, that some confidence may come out of, this is a major crisis, how the U.S. is handling a crisis. Besides being the reserve currency, that's part of the confidence factor. And, looks like compared to the rest of the world, we get an F here.
Well, the numbers are high, but then again, obviously population is high in the US. But, and you can compare it to China, let's say, who took pretty drastic steps early on. And if we are to believe the numbers that they're giving us, then yes, you could say that the US is they're not really.
Yeah, it's worse than all of Europe combined, including, Italy and how bad it was there, and Spain for a while. So
yeah. I think it's a compromise. Governments had to compromise between the economy and human lives. Unfortunately, this is what it boils down to. And
it does.
Some countries, like Greece here, we were very fast to lock things down and really contain things. And our economy obviously had already been in deep trouble some years ago, and it will be in trouble again for various reasons. But that's what they chose to do. Other countries choose to try to protect the economy a little bit. And hey, if there's a few more deaths over 60, 70, 80 years old, well, so be it. They don't say this obviously, but I'm thinking.
Isn't that like Sweden had no lockdown, right?
Oh, very little. Yeah, I mean, I don't know the details, but yes. So it's a compromise, and what's right, what's wrong, I mean, I don't know. I will always choose human lives before everything else, but at the end of the day, countries make their own decisions. So
well, Steve Volge would choose Swedish women. That's where he had his bachelor party.
Yeah,
that's very true.
All right. Anyway, so I thought I'd bring a little smile to your face.
that was an amazing idea my best man had, actually, Stockholm. Yeah, so we got Stockholm syndrome.
Oh yeah, good one to have, man. Good virus.
Yeah. It's the only syndrome I would have no problems having.
Except Katerina doesn't like when you have that problem.
So, what else is there to talk about? We talked about oil again, and my view on oil remains the same in the medium term. It should go up because simply supply stops. Obviously, we're in a big supply and demand shock at the moment. So actually, no, we're mostly demand shock at the moment, and it will take a while, and we will probably see oil price stay around here for a little bit. The question is, if you want to be long oil, what do? Oil futures are pricing a pretty steep curve. Like if you look at December of this year or January of 2021, it's at $30. So is that right or wrong? Sounds about fair to me. I think oil is going higher, but the question is, how do you trade it and not lose money waiting? We're
going to write a blog post about it today, the two of us.
Okay. Yeah, we will actually. That's a good idea.
Yeah. So as we've said, some oil companies, and I think it's a good idea we focus on 2 or 3 of them, because that's the only way you can avoid, this devastating contango that we currently have. Oil companies, but selectively, because some of them can simply just go bankrupt, and that's the end of it.
Yeah, you can use FX as well, like Rob says. There are oil currencies like CAD and the NOK.
NOK I like even more actually, because in comparison,
Yeah, we lost Steve as well again, but it's okay. He's going to come back. He's talking about NOK, and I like NOK as well. And I'm short Euro Norway. I'm a little bit out of the money, but look, oil is at what, $10, 12, whatever, and we're at Euro Norway is 11.6, 12. Let's say I think we can see where the top is in that pair. And barring a huge Euro rally or dollar rally, if you're trading USD NOK, I think this is a great trade to have a short on. But yeah, so you can use FX as well. Contango, our friend Didier is asking, is basically when the futures curve is upward sloping. So you buy a future, and which is up higher than spot, and if nothing happens to spot price, this future rolls down and loses you all this difference. So basically, you lose money even with oil not moving an inch.
Crude's bouncing pretty aggressively here, Stelios,
Yes.
and if we hit highs, this dollar Canadian might actually trade back below 141. It's been trading heavy all night, and I, it's just something I'm keeping an eye on, just because I've been trading the dollar.
I'm here,
Canadian.
by the way.
Good.
Okay. Hey, Steve. I was just saying that the dollar Canadian looks like it is 2 pips from lows, 3 pips from lows, and it might trade back below 141 with crude bouncing back. And like I said, it wouldn't be surprising to me to see crude go from $12 back up to 15, 16, at all. Like I said earlier, and we've ripped a buck and a half, and it looks like we're going to go a little further here.
Well, you saw Donald Trump's tweet, right? I have instructed the United States Navy to shoot down and destroy any and all Iranian
You don't
gunboats.
shoot down boats, just
yeah.
so I want this. Look, I don't want to get too started on the military. I actually joined the military, and I got in by standing on the sides of my feet because I have flat feet that look like paddles, and so I don't. Whenever he tweets military stuff, I have to bite my lip. All right.
Shoot down submarines and boats. Yeah. Actually, Steve is restarting his router, so he's going to be with us in a couple of minutes. So until then, what else? We're talking about oil. Probably worth mentioning, we had some UK data. The CPI came in unchanged, 1.5%. Actually, no, came in as expected, 1.5% year on year. That's the March reading. Given that CPI for March in other countries has been dropping quite a bit now, that's probably not a bad print. Let's see the next month, which is really going to be the important one. And we saw. So yeah, just really quick, just because I didn't cover the dollar Canadian too much, other than we're sitting on channel support here. This 141.20, you can see this is like a little breakout point here. We knocked our head up against it, then we came back, tested it, broke out. Now this is going to be really important support. Like I said, if crude continues to recover, one of the things I wanted to point out regarding crude oil, I know we talked about it being at the 127% extension, and I know a lot of you guys are limited to trading it. It's just a lot of the brokers, because they're losing so much money, they're only allowing for closing positions in crude. So, if it's like trying to buy it is not possible for a lot of you, but that doesn't mean that crude, and that may be one of the catalysts that could drive crude to go higher, is now people have they can only close out positions, and if the market's a little short, that could take us right back to like maybe this $18 level. If you look at the daily charts here, very divergent, right? So I wouldn't be surprised to see crude bounce back towards $18, and then it's almost highway robbery as far as I'm concerned, because what happens is you got people that can't participate in this move, people that are trying to buy the futures and they can't buy them, and so I see it as an opportunity to squeeze the market a little bit here, personally. Do I think crude should be weak? Yeah. I think it should be as weak as it is.
Probably not. You know, do I think demand's going to stay weak for, you know, for crude? Yeah. But I think, you know, there's going to be more strategic areas to be on the short side of crude. Matter of fact, dollar CAD's hitting lows right now. We're just brushing against those lows. Like I said, below 141.20 should open the door for, you know, maybe back towards 140 here. So just kind of keep your eye on the dollar CAD here. I think it's at risk of selling off a little bit. Let's see. Looks like Steve is still. Is Steve still out?
Yeah, now his router can't sync apparently, so I think he might not be back.
Oh. Hey, by the way, Stelios, I just wanted to say I thought about you the other day on Sunday night. My wife and I, you know, the kids wanted excuse me one second. The kids wanted to go, didn't want to hang out with us. So my wife and I were like, oh, let's watch something on Netflix. And the only movie we could find is the movie Best Friends.
Oh, yeah, I know.
With Anna Faris in that.
Anna Faris, yeah.
And every time I see her, I start thinking about you and about, you know, how you are such a big fan.
Yeah,
so
we met years ago in Bath in the UK. It was fun. We spent a couple of weeks. I mean, her and her husband and my ex-wife, and we went out for a few times. Really fun person. Really fun person.
Oh, that's great. Yeah.
She's funnier in real life than in the movies. I tell you that.
Oh, I'm sure she's hilarious. She was funny in real life too. So anyway, whatever happened to that woman? Is she
she has a series in the US, right? I think it's called Unqualified or something like that. I don't know. I don't get.
I don't know. I don't watch much TV, so I don't get out much.
By the way, talking about Netflix, have you seen this thing about the Chicago Bulls and Michael Jordan?
No, but everybody talks about it, and I need to see it. So
yeah, you have
to.
So,
speaking about the Canadian, also, I one of the other things I wanted to note here that here's a 38% retracement comes in at 141.07. So, downside might be limited, but still, you can see this little support zone here, that I was referencing at the 141.10. So this whole little area here, I think, is probably going to be pretty important. So if we do break it, because I'm always looking for where the kind of pockets of opportunity might be. Think about if you're long, put yourself in that position. Okay, if I'm long the dollar Canadian, where do I get worried? My worry would be if we broke through 141 and change, we probably are heading down here. So I don't want to be long anymore, right? So therefore my stops are probably around the 141 level. So, try to put yourself in the shoes of somebody who's on the opposite side of the market. And that might help you from a trading standpoint. Okay, where will I look for an entry? If I'm looking to short, if we get, down towards 141.20, and then I can add below 141 because I know that's where a lot of stops are going to be, then, how far will that take you? Well, how far we go would be more dependent on, do stocks continue to hit highs? Do we see some, some selling and or some rally in crude, that type of thing? Is that what drives us a little lower here? Speaking of which,
hey, Blake.
So the stock market is higher this morning, and I think a lot of people are attributing the strength in the stock market to the additional stimulus that's being added to our economy. But also, I guess I want to mention that that's probably the last stimulus that we're going to get here in the U.S. for quite some time. And I guess the other question I'll ask after that is, will it be sufficient? What do you think, Stelios?
The stimulus that's been announced so far, you mean, in the U.S.?
Yeah. But the additional 300 billion or whatever that we're adding, that we're adding now.
I think in the long run, this the whole package that's been announced is going to be enough, I think. But I don't think it's going to be enough to stop another final leg lower in equities. So I think what the US has done is unprecedented, is huge, and it will work in the end in terms of liquidity and stimulus. So
Will it?
I think it will in the end, but let me put it this way.
In what respect? In what ends?
Hey, Steve, I got to let you take back over because the guys from the office are trying to talk to me. So
yeah, bro.
All right.
Okay. Let's hope this solves the problem.
Yeah, I think it is. I think that what they've done will work in terms of asset prices not crashing, like they did in 2008. You know, you're not going to see
agree.
70% drop in equities. That's what I'm saying.
I agree.
But otherwise, in real terms, they're just. I don't think they're helping anybody by doing what they're doing.
Yeah, I don't know anyone who lives in their stock account.
Look at what's happened. Look at what's happened from 2008 until, let's say, last year. Forget about the last few months. Okay, 2008 to 2018, let's say. Asset prices have gone through the roof, right? Anything you look at, equities, bonds, housing, cars, wine, whatever you want to touch, it's gone to the roof. And when I say cars, I mean rare cars, not
not gremlins. And
and look at the average salary. What's happened to the average wages in the US or anywhere you look at? They're the same. Actually, I think they might be slightly lower. And look at education costs. Look at healthcare costs. So what's happening in the last 10 years with all the QE and everything? Where it's deflationary. You have less disposable income as the average person, right?
I'm going to hang myself. I'll be back in 5 minutes.
Wait a second. If you're going to hang yourself, how are you going to be back in 5 minutes?
I'll work it out. I'm Lazarus, man. All right, I'll be back. Go ahead. Anyway,
Dale, Stelios, or any of you, since I had to restart my router, I can't see the questions until like 2 minutes ago. So why don't you go ahead and give me some questions so we can go over a few charts.
USD ZAR. You want to take them? Stel, go ahead.
USD ZAR. Oh no.
Just prioritize.
Yeah. By the way, one of our friends is saying why I'm so bearish. I seem pretty bearish. Be a little bit more optimistic. Life is good. Of course, life is good. I'm not saying. I think all-time highs are coming. I'm just saying I think there's one more leg lower. That's what I'm saying. Because I think the market's pricing too quick of a recovery too soon. No, that's my.
I think that the life is good. Don't worry about it. It will take care of itself. Is what got us here.
And really, is life that good when I can't go out and I have to be worried about shaking someone's hand or giving them a hug nowadays? That I don't know. It's not so good to me.
No, it's not good, obviously, but hopefully it's going to be.
Anyway.
5 or 10 years from now, we won't have that.
I mean, if you just measure life by the amount of digits you have in your different accounts, bank, trading, whatever, I guess, life is good if you're making money. There's more to life, in my opinion.
Yeah, absolutely.
Yeah, no question about it.
Steve, gold, silver, and platinum is the first question.
Okay, gold, silver, and platinum. So the metals. Okay, what else, Sel?
We have a friend asking for USD ZAR. I don't know if you have a look at that.
We had a look at it yesterday, so if we have time, we will, but let's prioritize other stuff.
Aussie, CAD, and Kiwi dollar.
Okay, so let's start from the metals. First of all, having to do with crude, I keep looking at the continues. Okay, so it's, that's why you might see discrepancies in price. We reached the 161.8% extension. Actually, we bridged through that, but we did close on it yesterday, and we seem to be rebounding from there. So that's one thing to notice. RSI is still diverging, by the way.
Gold just made a new high, something I talked about early in the session. We had that confirmed high in the 15-minute, just made new high.
Yeah,
so
gold.
Now you have nice divergence.
Gold is still finding support because that was made by hand. Let me, make it more solid here. So there it is. So gold is finding support for in that trend line, and so far it's rebounding. So I have to say, that despite me seeing several divergences and thinking that perhaps in the short term gold will pull back, the path of least resistance until proven otherwise remains to the upside. And needless to say that no matter what happens in the short term, I really see no way that gold in the long term won't, and silver the same, won't overperform the vast majority of other assets, especially against fiat currencies. It should appreciate. Here is gold, here is silver. Silver, keep in mind, has broken through this ascending channel, so this is definitely some kind of a bearish development. But keep in mind that, first support was at 1450. We reached that yesterday, and the next area of support is at 1385. You can see it here, this horizontal support resistance area. So although I still see the possibility of a short-term pullback, as I've said multiple times, I don't want to be short any of these metals, right? Because what you saw happening with crude oil, the exact opposite can happen one day with gold and silver. I mean, several investors might decide to actually take delivery on their long positions, and many of the short positions are hedgers, so at least they do own the physical commodity, but many of them aren't. And if they realize that we're coming close to the expiration and they will actually have to deliver, there's going to be, a massacre for shorts in the market, because there's going to be an incredible short squeeze if that happens. And I would never want to find myself in such a position holding short, because what will happen to you is exactly what happened to the oil traders in reverse.
Steve, can you take a look at yields? They're starting to turn up. I know everyone knows talking about it because it's a given. The 10-year notes are going to zero. I don't know. We're putting in higher lows on a 4-hour time frame.
Here is the 10-year, and here's the 30-year. Common denominator, if you ask me, is that price action is still very heavy.
Yeah, but see today's candle where it's still a higher low. We just took out the previous higher low and turning up. Just wanted to make you aware of it.
Yeah, you're absolutely right. But in the grand scheme of things,
anyway, it's a shot down here, I think.
I still don't see,
the
concrete
case for higher rates.
Concrete evidence that we're going higher.
Yeah, because we all have biases, No,
I'm just talking about the chart at the moment. My bias,
one more low.
If you want my long-term bias, is that the 10-year eventually is headed to
4%,
15%, 20%.
Oh yeah, okay.
Absolutely.
Okay.
As people didn't believe that could happen, if you ask them in the 60s, that could happen, in a few years' time, and they had to actually take short-term rates to 20%, if you remember.
Yeah, Volcker
I think that's going to happen again.
Last time the Fed did it, I think this time it'll be the market and not tough demand.
I agree with you.
So it won't be the Fed tightening like Volcker did.
No, that's why it's going to be much more brutal, because the Fed isn't going to be doing it. The market is going to be doing it without asking questions.
Bond vigilantes, remember those guys?
Absolutely.
All right, so I don't have a guest today, bro, so you can take it as long as you want.
Okay, good, because my internet line didn't allow for much. So 10-year, still looking heavy. I still think that we can indeed push to zero. But yes, I would be looking for a much bigger correction, afterwards. And here's the 30-year. Now, that would be actually interesting, because it would be interesting if we could see a lower low in the 10-year, but not verified on the 30-year yield. So that would be an interesting divergence that I would be definitely paying close attention to. Now, speaking of the DAX, the DAX still in a large consolidation here. And yeah, in the short term, the DAX does look like it's rolling over. So bonds still look better to me. Bond yields still look better to me for upside than the treasuries do at the moment.
A lot.
Yeah. So yeah, that would eventually imply, because divergences cannot hold forever, that would eventually imply a decent bid in the Euro USD, which for the time being the only thing it's doing is what USD yen is doing, which is more or less annoying people that stubbornly attempt again and again to trade it. In my opinion, there is absolutely no reason why you should be attempting to trade the Euro USD at the moment, as there is absolutely no reason why you should be attempting to trade the USD yen. There are decent opportunities out there, but Euro USD and USD yen are not among them. Having said that, you know, gun to my head, and if I really had to be forced to take a position, I think we might see another leg lower before we see a rebound. But as I said, I wouldn't be trading on that, right? Because you know this chart is a this chart is like this chart is like, you know, a mess. I mean, it's a consolidation picture here. Every swing becomes even less volatile than the previous one. Of course, you know, at some point, you know, if you wanted to play that from an option side, you know, perhaps you could do this by, you know, assuming that volatility would accelerate sooner rather than later, and we would see a breakout in one direction or the other. But until that happens, just, you know, leave it alone. That's what I think you should be doing. And the USD yen looks exactly the same, so I'm not going to go over it. Pound suffered somewhat more. By the way, good opportunity. Yesterday I mentioned about the euro pound potentially breaking out, so it's a good opportunity to show it today. So this is what I was looking for in the euro pound. Euro pound's downside momentum was clearly decelerating, so, you know, price was contracting in this descending wedge, and we did produce a very nice breakout from that. Got rejected from the first support resistance area, but I do believe that it's a nice risk reward. I mean, the closer we head to 87.50, I think the better the risk reward opportunity to try to be long against the low. The low was at 86.85, let's say. So I think buying it somewhere at 87.50, risking roughly 75 pips, let's say, and looking for another leg, at least one more leg higher towards 89.50 looks like a good proposition. That's what I think. So that's what I think about the euro pound here. Now, euros and euro kiwi, since we're at the crosses, euros is still holding within this descending channel. On the other hand, we have found support repeatedly in retesting this broken channel's resistance as support. So, you know, we're currently stuck between this support area and that resistance trend line. I think a breakout in either direction is going to indicate the next leg. Same deal here with the euro kiwi. Euro kiwi actually broke above this channel, retested it. I still favor at least one more leg higher, because I still believe that risk is very wrongly priced at the moment. So I still favor downside from here in S&P, Nasdaq, and, you know, everything else that's risk denominated. We also mentioned yesterday the DAX. DAX has broken below this channel, but is still holding. I actually showed yesterday the 4-hour chart, so let's do it again. The DAX is still holding this rectangle. So, you know, if you want, you know, a confirmed breakdown, you would need to see a breakdown from this area, 10,160. That would then target 9,500. So that would be a nice confirmation for looking lower. Now, somebody's asking for natural gas. As I mentioned the other day, natural gas still seriously diverging from, here it is. So, that's on the 4-hour chart. Let's better go on the daily. So natural gas still seriously diverging from crude. Here it is. Higher high, while at the same time crude was actually going to you know, unprecedented negative territory. Natural gas was not producing a lower low. It was actually moving higher, and that is something you should definitely, you know, keep an eye on. So I have to say that natural gas looks like a, you know, much better play at the moment, but probably also leads crude oil higher. So, I still believe that crude is going to turn decisively higher. Might not happen today, tomorrow, might not happen next week, but I don't think it's going to take more than, a few weeks for it to do so. Dale, if you can help me with a few more questions, because I've lost the vast majority of the questions from the first 45 minutes of the webinar. We have questions about Aussie and Kiwi. Nothing has really changed here, meaning both of them have broken down from respective corrective rebounds, corrective in question mark. I'm waiting for an acceleration lower now to confirm, but so far so good. I mean, risk reward still favors downside targets from here. Here's also the Aussie yen, if you want to look at it against the yen. This rebound looks correct to me as well. This looks like a wedge, and here's the Kiwi yen, same type of deal, but even a weaker wedge. I mean, the rebound was clearly weaker in this occasion. Hi Steve, can you please cover Euro Yen, Aussie Kiwi as well? So let's go to Aussie Kiwi since we're at Aussie, and yes, I'm going to go over the Euro Yen afterwards. So Aussie Kiwi found support once again at parity. It's a level that we haven't managed to break through in many years, and the rebound looks okay so far. I can't say that it looks impulsive because it doesn't, but it looks okay. But in order for me to even consider buying, which I'm not gonna do that, because in general I don't find any good reason to be buying similar currencies against each other, because it's a much harder thing to take into account fundamentals as well in most of the cases. So from a technical perspective, if you're looking to buy this, I would be looking for a pullback towards 1.036. Otherwise, I think that the risk reward isn't really appealing to be buying it. But on the other hand, still no real evidence you should be selling it. But as I said before, I wouldn't be trading it in general. I think trading two very similar currencies, one against the other, not the best of trades you can choose to go into, if you ask me. There's a question about Euro NOK. Yeah, gladly I'm going to have a look at it. It's rebounding, and that's completely unsurprising because the move lower we had already, marked it as a potential pennant. We actually found support where I expected we would find support. I was actually contemplating into taking profits in my short position, which was in the money, but it's only 1/3 of a position. But I held my initial plan, and my initial plan is that I sold 1/3 of USD NOK and 1/3 of Euro NOK, wanting to build a long-term trade. So although I knew that they would probably rebound based on the price action, I just kept those positions because, as I said, I'm building a long-term position here, so I don't care if I go a little bit out of the money again. I'll just add to this position because I'm looking at this as a trade that can actually evolve during a long period of time, months, perhaps even years. And, I'm not going to be paying to hold that position. So I'm actually going to get paid a little bit to hold that position. So I don't really care. I anyhow don't have leverage issues. I don't have margin issues. So I'm absolutely fine with that. So I am seeing this rebound. I don't yet know the nature of this rebound. I mean, it's still not impossible to see new highs, although I see it's a very high likelihood that this rebound is not going to take us to new highs. So I'm looking, for example, in the case of Euro NOK, I'm looking at levels close to 12 to provide resistance and an opportunity to sell even more. That's how I'm looking at it. And it's quite similar to USD NOK. So if you have a look at USD NOK, here it is. As you see, crude is at all-time highs. 2 days ago, it was at negative, and USD NOK was far away from its highs. So I also see here a very high probability scenario that we've already seen the high. Not certain, but a high probability scenario. So at any signs of a failure here, let me fib retrace this, at any signs of a failure of a really decent reversal towards the 38.2 or the 50%, I'm probably going to be adding more here. Okay, so I had, as you see, predicted that likely we're headed towards a rebound, but I still think the likelihood is that this is a corrective rebound and we might see a much bigger acceleration to the downside following that. Anyhow, we're going to soon find out. I don't think it's going to take more than a few weeks to find out what's happening here, and it's perfectly fine by me. I mean, my time horizon is always, you know, at least a medium-term one. Now, the question we had about euro yen, so I don't forget about it. Euro yen, there it is. So, euro yen. First of all, you have to acknowledge that this 116 area proves to be very tough to crack, right? It was acting as resistance there. It was initially acting as support, then as resistance there. Support, support. And if you zoom in, you know, multiple attempts, and it's still holding. So first of all, from a risk reward perspective, trying to sell euro yen against 116 makes no sense, right? I mean, it's a very key area of support. So from a risk reward perspective, even if you don't like it, you risk very little to perhaps catch a rebound towards perhaps even close to 120, right? Even if you extend this channel here, you can see that, you know, perhaps towards 119.30, something like that. There you go, to the 61.8. So from a risk reward perspective, you know, if I had to do something with it at the moment, I would rather buy it than sell it. Now, having said that, there is also, you know, no disagreement that it looks, you know, like it's very, very heavy. It is. It is. But as I said, this is not the right level to be selling it. So it's one thing that it looks bearish, but another thing, where is the proper level you should be selling it? So if you really want to be selling it, I would be looking, you know, if you're lucky to find, you know, 119.30, that's towards 120, that's where you would be attempting to sell it and have a risk reward that makes sense. Now, when does this picture change? If we break through this descending channel, that's then proving that something different is happening there. And perhaps we're going to see a short squeeze following that. But as long as we're trading within this channel, you know, keeping a bearish bias is what you should be doing. But finding a proper risk reward to express that bearish bias is also something you should be doing if you want to be in a proper trade, right? Hey, Steve, thoughts on ASX 200? Yeah, ASX 200 is an index I so much kick myself for not trading, because I was looking at this channel and that overthrow. I was short the S&P, so it's not that I didn't take advantage of, you know, the general sell-off, but especially the ASX. Oh, what a beautiful formation, and especially the overthrow at the end. I should have been short this one as well. Wasn't for stupidity reasons, obviously. Now, focusing on the shorter term, if this isn't a bearish pennant, I don't know what is. So I have to say, it looks very bearish to me as long as we're still trading below this pennant. It looks to me like we broke down. Yeah, we are seeing a nice recovery today, but I think that against 5,500 for 5,600, risk reward favors short positions. Why not another attack towards the 4,420 low? Seems, from a technical perspective, very likely to me. Could you look at the USD Swiss? Yeah, I can look at it, but can I really help you about it? Not really, because it's more or less the inverse of the Euro USD, and that's why you see this technical picture. So what does this show us? It shows us a consolidation, right? A triangle. Now, I
Steve?
would, yeah, coach.
I had a question I couldn't answer, and gosh, I feel, pretty, incompetent. But what do you think would be the trade if Hong Kong comes off the dollar peg? I figured if anyone knew, it would be you.
That's a good question, and it's a
'Cause
multifactorial question because Hong Kong has a lot of unrest as well. At least
Yeah.
it did until conveniently
Yeah, I
COVID
know. Yeah,
came around, right?
yeah. No one is safe,
Um,
not even a king, and I'll be the excuse for everything. So, because it looks like there people are specking that might happen. I'm wondering how they're doing it.
If that happens, I think that initially there's going to be a lot of pain.
Just risk off everywhere in equities or a currency play, or
I mean, locally in Hong Kong currently. I
yeah,
don't believe that's going to affect the globe in general. I don't think it's going to be a global event.
just the Hong Kong dollar.
Yeah.
But it won't be the Hong Kong dollar, right?
No.
Yeah. Coming off the peg, they'll have to find a new name.
Yeah. Ben says Hong Kong peg fails. China has lost their main source of dollars. That's a good point. But in all honesty, I've said that before. Looking and looking again and again and again, and you know that I've been saying that for years.
Gold.
I can't spot of any developed economy worse than the US economy. I mean, for me, it's so much worse than, I mean, perhaps with the exception of Italy, I think they can compete. But Italy mostly for political reasons. Because Italy, for those of you that don't know, Italians have had the magnificent idea of putting, extreme populist governments in place, which decided to change the electorate system to, I don't know what's the English term, analogico, it's, Stelio, I don't know if you're still here, απλή αναλογική. Anyhow, the system is there, there is no enhanced system, so the party that takes the more votes gets actually more than the percentage for people that voted for it, so you can actually form stable governments. So what they've been going through is that they keep forming very unstable governments that last for very little. They are consisted of combination of parties that might have very diverse ideas of how they should be running the country and the government.
Can I assume that the play, if Hong Kong dollar comes off the peg, is I don't know, because now you're talking about Italy. So I'm assuming.
I told you. I think there's going to be pain in Hong Kong to begin with.
Pain in Hong Kong. Okay.
Oh yeah, absolutely. Temporarily.
So short, hang
yeah, I think in the long term, if you want my long-term thesis on Hong Kong, I'll tell you what I believe. I believe they shouldn't have a peg to the dollar because the economy of Hong Kong was a much better economy than the US. But for those that don't know, it's very basic, but you might have never thought about it. I mean, it's something that doesn't cross your mind if you haven't bothered about it. When you in essence peg your currency to another currency, what you do inadvertently, without having an option about it, is that you import their monetary policy. Exactly.
Yeah.
So the Hong Kong economy was a fine economy until it started importing a monetary policy that was not appropriate for them. And many of the problems of the Hong Kong economy at the moment have to do with the fact that they were functioning on a monetary policy that was not fit for their economy. And that created several bubbles. So I think there will be short-term pain, but at the end, I think it's going to be a good decision. if you're asking me.
Thank you.
And I don't think it's going to be a global problem. That's
Okay.
my assessment. But I'm not an
There-
expert, right? In
There
that.
you go, Scott. Take that to the bank.
The stock market should also suffer, but I don't know how much the currency fluctuations initially are going to affect it. Since you're asking now about the question we had on USD Swiss, I think that the most likely scenario on this chart is A, B, C, lower. So it more or less, fits what I said before with Euro USD. The fact that perhaps if I had to choose, I would see one more leg lower and then higher. So that translates to the opposite in USD Swiss. One more leg higher and perhaps lower. So if I had to choose, that's what I would say. One thing that you have going for you here in USD Swiss is this triangle is very clearly defined on the chart, right? So, I mean, I would totally understand why somebody would want to buy a breakout in the case of this triangle. And as I said, I think breaking out higher is a likelier scenario than breaking down lower. What about Dow Jones and Nasdaq? Think will retrace down soon? Yeah, I mean, all of the indices of the US indices are going to be doing the same thing. I mean, not necessarily in the exact same extent, but if that's the case, I mean, if this is a breakdown that we saw happening yesterday, that's what all the indices should be doing. I mean, we should see a rejection and a continuation lower. Now, admittedly, the Nasdaq hasn't broken lower. I mean, as you see, it found yesterday support at this ascending channel trend line support. So the Nasdaq hasn't even produced a breakdown yet, and it remains, the strongest. Looking back at the recovery itself. But I think that we've run too much too soon based on hopes that unprecedented amounts of monetary and fiscal stimulus can solve all the problems. No, they can't. Can they keep supporting the stock market? Yes, they can. But even by supporting the stock market, it means that it's not going to tumble as much as it would otherwise. But I don't think that market participants will be able to go over the huge damage to the economy. I mean, keep in mind that the US is projected likely, with the unemployment claims we're going to get tomorrow, we're likely to see unemployment go to 20%. So, new all-time highs immediately in a V-shaped recovery with the economy being in big trouble, I doubt it. Only the fact that they're managing to, keep it where it is, it's, a little miracle based on, trillions and trillions of dollars. But I think it's going to have a very hard time to going to new highs before suffering first more. I do think that we're eventually going to see new highs. Asset price inflation is going to be here to stay. So yeah, they're going to manage to prop up probably the stock market quite a lot higher. But I think we should see a sell-off first. And by sell-off, I don't mean 1.5 days of a sell-off that we saw, until yesterday. I mean, at least several more days of strong downward price action. That's what I would expect.
Thank you, Steve.
Okay, Coach, I think we covered enough ground for today. Needless to say, if for some reason you haven't registered for the Trader Summit event, that's a big mistake you should fix right now. It's going to be, a magnificent event. Couldn't have better guests, and Dale is one of the people we should think about it. And I will see you again tomorrow.
Yeah,
we have data.
Okay, remember everyone, don't just count your pips, count your blessings. And become part of our community, make an investment in yourself. You're welcome, everyone. See you tomorrow. Okay, Steve, catch you later, buddy.
Bye-bye, coach.